We will never have a normal economy while this virus is circulating. You'll have a somewhat messy economy. It's going to get messier as we head into winter.
I think a lot of people think this is all over now, and they think life is back to normal, and they'd be very wrong.
Hi, this is Alessio. Hope you're well, and welcome to this video update. So in this video, I want to talk to you about a subject which I really didn't want to talk about. As I'm sure some of you know by now, over the last few months, I've refused to watch a lot of news or commentary on the virus situation. I really didn't want to talk about it or even think about it, mostly because it's such a frightening and depressing subject. And also another reason why I haven't really discussed the virus situation is because all we hear in the mainstream news and the news media is about the virus. So the reason I want to make a specific video about the virus, the coronavirus situation, is because of something that could actually impact the markets, the financial markets. And that is the potential for a second wave in the virus, in the coronavirus. And of course, everybody is worried, understandably, about that second wave scenario. But before I discuss more about that potential second wave and how it could impact the markets, let's just take a look at what the experts are saying right now. I want to play you just a couple of clips about what some of the key experts in this matter are saying. Let's take a look.
Big question that everyone has in the back of their mind as we come out of this lockdown is, will there be a second wave, in particular in the winter, potentially running alongside perhaps a bad flu season?
Well, we are concerned that we haven't really come out of the first peak. We're in a plateau. We're still seeing mortality rates. We're still seeing new cases, several thousand every day confirmed. So I think it's something that we just don't know. We're concerned about it, of course, and people still need to socially distance. They need to wash their hands frequently. It's about human behaviour that will control this virus ultimately, not about testing and tracing, because that doesn't stop the spread. You can test as many as you like, but if people aren't behaving correctly, then the virus will spread.
I mean, I'll give you one anecdotal thing. There's no doubt for a lot of people in this country, mentally, they've locked out of this lockdown.
Absolutely. I think a lot of people think this is all over now, that they see the figures coming down, they see the R rate under 1, they see the lockdown measures being de-restricted, and they think life is back to normal, and they'd be very wrong. I think that would be very dangerous if people thought that. This is a very, very transmissible virus. We've only got to look around the world to see how quickly it spread. And nothing has changed, except that we're a bit more aware of it now. We are socially distancing, we're taking those precautions, but people are beginning to forget them already. And I think we do that at our peril, I really do.
June 1st, we had the lowest number of people infected in this country, 17,000 or so. And I think in the United States, we basically decided that was the basement. That was as good as we could do. 17,000 people becoming infected every day, hundreds of people dying every day was the best we could do. That's sort of what that graph shows, and now we're going to have this significant spike again. I think right now we need to be worrying about everything. These numbers are going up. I mean, I don't want to panic people in that sense, but this is troublesome, what's happening here in the country right now. You see what has happened here. The numbers are not only going up, they're at the highest levels they've been throughout this pandemic.
All right, guys, as you heard there, so in the British media, some doctors and scientists are saying, as you heard, that we should not get complacent, we shouldn't get comfortable, and it's not over yet. I think they're actually quite right. And I think it's good to be, in some sense, a pessimist. I mean, I guess it makes me a bit like Schopenhauer, the famous philosophers of pessimist. But I think when it comes to your own health, it might be better to be more cautious and a bit more pessimistic than optimistic, because it might have a better survival impact on you and everybody else. So what is interesting is that, as we saw in that graph just a few minutes ago, they were saying that the moving average, I think it was a 7-day moving average of the virus cases, especially in the United States, that moving average has been going up, which is, of course, worrying, because you want to have the moving average going down, which is often called a flattening of the curve. So that's quite worrying, obviously. And that's causing some people to say, well, you know what, this could be the start of a second wave in the virus. We'll have to see on that, of course. I would say this, by the way, a few months ago, back in April, May, I think it was, I can't remember, but about a couple of months ago, I had information from some sources that the second wave could occur in July, as far as the UK is concerned anyway. But it seems at the moment that that prediction back in April, May, which I don't take credit for, it was from scientific sources. They were saying that the second wave could likely start in July. And we're already seeing, as we come to the end of June, that could actually become a reality. Now, again, I'm not the expert on this specific matter, on the virus, so I'm going to leave it to the experts to decide whether that's true or not. My interest in this is how it could impact the stock markets and Bitcoin potentially. And I think that's the main worry for a lot of people. So here's the thing, guys. For anyone out there who thinks that a spike in cases is going to cause the markets to crash or Bitcoin to crash, I think we need to remember that for the most part of the late March to June, despite the rising case of the virus, we've seen that the markets have actually ignored all of that. So we've seen already that the stock markets and Bitcoin, by the way, have largely ignored the worries about a potential second wave. So despite rising cases in the coronavirus situation, we've seen the markets just ignore it and shrug their shoulders and keep going up. The same thing is true, by the way, with how the markets responded to the economy. Despite rising unemployment numbers, I think right now is about 20% unemployment in the United States. So the markets just said, so what? And they kept going higher. So we need to remember that just because the economy and the situation with the virus may look bad right now or could get worse in the near future, that does not necessarily translate to another crash in the markets. The two are not the same thing. So there is actually no 100% correlation between the two. However, there is a case to be made. In fact, some people have argued there is a case for why the markets could perhaps crash or drop again, if not a crash, but maybe another retracement, if worries about a potential virus second wave increase. The argument goes a bit like this. It's possible that the market rally so far, the rally in the stock markets, has been based on a potential V-shaped economic recovery. In other words, the argument is that the markets are forward-thinking and based on expectations of an economic recovery. So the argument goes like this, that if these expectations, if these forecasts on an economic recovery were wrong, because if we have a second wave, that means another lockdown situation. And it means we're back to square one, back where we were back in March, right? That could potentially unravel a sequence of chain events that could lead to a potential on the drop, maybe a crash, maybe a retracement in the major markets. And by the way, guys, let's not forget this. Right now, there is still a high correlation. There is still a correlation between the S&P, the stock markets, and Bitcoin. So we've seen already how every time the markets drop, every time the stock market drops, it drags Bitcoin down with it. So we need to remember these two are still correlated. Bottom line is, the way I'm seeing it is this. First of all, do I think a second wave is going to come? I honestly don't know. I think the experts can determine that. But one thing we should remember is in 1918, during the Spanish flu epidemic, because the second wave, the Spanish flu, was worse than the first one. Now, as to whether something like that's going to happen in the near future, I honestly don't know. I can't tell you. But let's hope it doesn't happen. Let's hope it won't be as bad as that. But the way I'm seeing it is this. If investors and if the stock market is going up based on expectations of an economic recovery, in other words, a V-shaped recovery, and if that expectation is wrong, in other words, if we're going to go into a second wave of the virus, or if we're going to go back into a lockdown situation, then that could potentially unravel this entire rally, because essentially that would mean that it's not a V-shaped recovery, but more an L-shaped recovery, or maybe a U-shaped recovery. An L-shaped recovery would be something along the lines of, 1987. After 1987 crash, it was a very long-haul, slow recovery, very slow recovery. And one thing we need to remember is this. It's not the virus itself that's going to bring down the market. It's more uncertainty. So often people mistake the cause for the effect, or the effect for the cause. We need to remember the virus itself is not the main driver of why markets drop or why markets crash. What causes markets to drop and crash is more emotional sentiment, the irrational behavior of market participants, of people. Okay, so uncertainty. There's one thing human beings hate more than anything is uncertainty about the markets. So if investors become uncertain about the state of the virus and perhaps the economy as well, it's possible they may start selling. And what happens is when that selling starts, the people who've been over-leveraged, the people who've been extremely leveraged, for example, let me give you an example in this. Back in February and January of this year, we saw people were extremely leveraged, extremely long. They had bought call options and heavily bullish on the market. And usually in a situation like that, as we saw for ourselves, when everybody is bullish, when everybody is long, that means there's nobody left to buy. When there's nobody left to buy, that becomes a saturated market. A saturated market is a very dangerous market because essentially when people start selling, when the professionals start selling, that causes margin calls. In other words, a drop in the market causes margin calls. That's essentially when people who've been extremely over leveraged suddenly have to close their positions. That causes a bigger drop. Then sell programs come in, and then short sellers come in, causing bigger drops. So again, a lot of market activity is driven by fear. Again, fear of loss or fear of missing out. These two potential sentiments. So we have to remember there are actual deeper reasons for why markets go up and down than just something like the virus or the economy. Anyway, guys, just to wrap this up, as far as I'm concerned, again, I told you that I took the majority of my profits when the markets hit that resistance, as we can see on that chart, closer to 3,200 level, because I see more risk in the market than potential reward. And I would just much rather wait patiently for the next retracement, the next major pullback in the market. Remember, guys, this election season is coming up close to November. I think November 3rd is the election. So the closer we get to the election, there'll be more uncertainties and more volatility in the markets as well, especially if we get into a position where we might have a second wave of the virus as well. And here's the thing, guys, if the stock market also has a retracement, very likely could drag Bitcoin down with it, because the two at the moment seem to be correlated. And until this correlation disappears, until there's some decoupling, we could see Bitcoin and stock market continuing to move in similar patterns. All right, guys, just to let you know that we cover a lot more detail in our member videos as well. We cover the stock markets and also Bitcoin, gold, and Forex in our member videos, so check them out. And I look forward to seeing you guys in the next video update. Thanks a lot, guys. Bye for now.